Hello and thanks for joining me again. This is the US Futures weekly chart analysis. As usual, the first chart we look at is the US dollar index. The US dollar affects so many other related markets. We always look at this first. You can see that price has been trending higher since breaking out above this longer term breakout line. Price was up this week. The volume was very high because of contract rollover. These are all contract rollover weeks. With the market being higher this week, it puts related markets under pressure. That is, related commodity markets that are priced in US dollars under pressure, and also currency markets where the US dollar is the counterparty. The US dollar index is the US dollar compared to a basket of other currencies, and I use it as a proxy for the strength or weakness in the US dollar compared to other currencies. So you can see the market was up strongly this week. It's always difficult to compare volume when it's rollover week. Generally, volume and spread are related closely. So with the wider spread this week, you would expect that volume was relatively high or higher than average. It looks as though price is going to come up and issue a challenge to the highs of the trading range. Whether there's some consolidation initially and then a challenge, we'll have to wait and see. But the wider spread this week over the previous bars, the previous two bars for sure, and probably when price was coming lower as well, suggests that this market has regained some strength and it may even push out higher at some point in the future. We'll have to see what happens around this 105, 104.5 level. It will likely take some sort of effort to push above these highs. We'll just have to see how it performs. The market is strengthening. This is the S&P 500 futures, the E-mini. Here was the previous lows of the range. Buying support came in down here previously. Prices moved down to that level this week. Volume was slightly above average and spread was slightly above average, so volume and spread were about equal. There may have been a little more spread than volume. That just suggests that there was a few more sellers in the market than buyers, but not overwhelmingly so. This is the previous buying support zone. We'll have to see how it performs. The way the market's come down to this zone this week suggests a bit of intent. I would expect some buying support to emerge here. Just how much, we'll have to wait and see. This is the US Treasury 10-year note futures. The 10-year note had shown some support come in recently. These are the interesting levels we've been looking at. Price has broken below that level this week where support came in, and it's even vulnerable to these previous lows here where the market dipped lower and reversed, came back up and challenged this 120 level. This market is vulnerable to the downside, there's no doubt. Volume wasn't particularly high this week, so activity in the market was low, but all the activity was to the downside. Copper price futures. Copper price futures came up to the gap previously. Here was the gap. Here was the lows of the gap. Buying support came in on this bar here, and price moved higher in response. Now you'll see that this week's trading was as an inside bar. Price traded inside the previous bar's range for the whole week. There is relative safety to be found within that range. So although price moved lower on an increase in volume, spread narrowed and price traded within the range of the previous bar for the entire week. This was an attempt by the market to consolidate. There was resilience being shown. The market did not want to move lower, and I would expect if the US dollar eases a little bit early next week, price will pop up to some degree. And if the US dollar moves sideways into consolidation for a period after rising higher this week, price might come back and re-challenge the lows of where this gap appeared previously. Gaps are like pivots. So, for instance, this is a pivot high here, and you would mark that as a high. Think of gaps as a pivot. The market's created a pivot here, and that's a high or a low that the price has to negotiate a path through. They're always an issue. Whether that's because of gap theory or for whatever reason, they're an issue. The next chart is gold price futures. This is the level we've been looking at for a few weeks now. This is a level to keep an eye on when we're looking at the next chart. I'll tell you why in a sec. You might remember if you've watched this before. These were the previous lows here. Price has been really resilient. It's been reluctant to come off. There's been a little sideways consolidation here, and price has moved up to the highs of the range this week. This is a good strong move, particularly considering that the US dollar was stronger this week. We saw in the first chart the US dollar was up. That puts this market under pressure. The fact that price has consolidated sideways and then moved higher suggests this market is gaining some strength. It didn't really issue a challenge to this level, it's just pushed up to it. It will require an increased effort, most likely seen in volume, to move above that level or through it. But just the fact that prices moved up to this level is some form of a show of strength. This is silver price futures. This is the previous low here. Price broke below the previous lows a month ago, and it's been struggling to recover ever since. There was a period of consolidation. Prices moved back to the level. This was always going to be a difficult level to recover back above. Once price breaks below a previous support level, especially this one, which is a longer term previous support level, it's always going to be difficult to recover. It will likely take an improved effort to do so. The price did not move lower with the strength in the US dollar, so that was a positive. You see that volume was increased this week, spread narrowed considerably. The market was absorbing supply here, and that might be an indication of an intent to move higher in the future. We'll have to wait and see. Now, this level here is the interesting level I mentioned from the gold chart. This is the level that gold is currently at the moment, so you can see how much weaker the silver market has traded compared to gold. All of this on the gold market pretty much travelled sideways here. This rise in price saw gold move above this level, and price then moved down here. Gold moved down like this, went sideways, and is now challenging this level. The silver market is trading far weaker and it's struggling to recover the previous lows. There is also a gap here which the market will need to negotiate a path through if price is able to push higher. We'll just have to wait and see. But this market is definitely trading quite a bit weaker than the gold price market. Light crude is the next chart. Light crude was trending higher. It spiked on the Russia-Ukraine issue. It went through a period of consolidation, and now it appears to be forming some form of bullish absorption. Now, spread did narrow this week on an increase in volume, so some supply was likely drawn out this week. So I would expect price to come back to some degree next week, at least initially, and test for supply. If supply is drawn out, you might see a down week next week, or if you notice, often the previous bar trades down through the range of the previous bar each time. You might find that happens next week. You might find price trades back through the previous bar's range before attempting to move higher again. But some supply was drawn out this week, there's no doubt. Narrowing of spread, increase in volume. Watch for the response next week. I don't think it'll be particularly weak. I expect price will most likely consolidate sideways. The next chart is the Aussie dollar currency futures. The Aussie dollar currency futures, important level to watch is the 70-cent level. Previous support has come in at that level in the past. The market deeply penetrated this level only a month or so ago, but did find enough buying support to recover. Prices moved lower this week. It was contract rollover this week, so the volume becomes obscured with the rollover volumes. But the widespread suggests that volume was increased this week. I would expect price to issue some form of challenge to the 70-cent level next week. We'll see if buying support comes in like it has previously back here. If price penetrates deeply again like it did on this week, it would leave price vulnerable to a breakdown. We'll have to wait and see how the market negotiates this level. I would expect some initial buying support to emerge. If selling pressure becomes overwhelming, price will be vulnerable to a breakdown. A breakdown below this bar's low would be a serious issue. It would be a significant break. There is a vague sort of last gasp support level back through the range of this bar now. But the market's looking vulnerable, there's no doubt. The final chart to look at is Bitcoin futures. The interesting levels are the range of this bar. The little gap just here where if price does move higher at some point in the future, it'll require some sort of increased effort to get through this little gap, I expect. I suggested last week that price would attempt to move sideways in an accumulation pattern for a while. You'll see buying support came in on this bar and buying support came in on this bar. This was a consolidation bar. This was a consolidation bar, and once again this week an attempt to consolidate. This is an attempt to accumulate through here like this by some in the market. Accumulations are periods where the market remains vulnerable. They're not always successful. A period of accumulation can take place that fails. Something fundamental happens in the market and those who are accumulating can dump their stock very quickly. They're not committed to their positions just yet. And if that happens, you'll get a widespread down bar in response. So at the moment, I would suggest that there's an accumulation taking place. There's no guarantee it'll be successful, but that's the attempt at the moment. If you see price at some point break above this gap, perhaps test the breakout for strength and then move higher, those who have accumulated will become committed and will start defending against supply and attempting to mark the price up. If something in the market fundamentally happens to cause them to dump their stock, you'll see a widespread down bar in response, a break below the lows here, and price will come back to a previous support level. There's a minor one about 25k, and there's another one about 20k. So they're your two levels that you would look at if there was a serious breakdown. At the moment, there is an accumulation underway. Whether it will be successful or not is not yet known. And you can accumulate with the accumulators, but just always be aware that those who are buying aren't yet committed to these positions, and they will dump them if something happens that causes a change in sentiment. Okay, thanks for your time. We'll finish on the US dollar as usual, which was strong this week. I hope that was worthwhile. Thank you. See ya.